Hello guys, welcome back to my Forex Black Box channel. Thanks for subscribe and likes and all the stuff you guys doing. Please leave a comment so I know your view as well and we can discuss it down in the comment. Um, at this point, I'm gonna do analyzing pound USD because it's a very famous one. Everyone asks me about it, and then I know few trader members I know of they have issue or they been longing for some period of time here and they made a mistake here and they still hold on one trade. Let me just make this clear for you guys, okay? If you take a position and you hold on it if it's a loser, you in the wrong direction, don't do it, okay? Don't do it because it can keep going until burning account completely. And that's the last thing you will really need in Forex trading. Forex trading, it's very simple to follow, but not easy to achieve, okay? It's just like anything in the life. If you know how to act, it's simple to say a few words, but when you come in front of the camera and you try to achieve that, it's not that simple. It's not that easy. It's simple to say a few words, but it's not easy to say it to whatever you want to do. Just like acting, like driving, like flying, like anything in life. You need to have good experience. You need to have a good idea what you're doing and what the consequences is, and when you get in, when you get out. Okay. Let's just go ahead with this pair at the moment. I normally don't trade bound USD that much. I only have it as a meter or overview of the bound globally because that's a measure pairs, and that's why I keep my eye on it where the bound on the global currencies at this point at this week here. I'm looking weekly. We are at the lowest low before 2017. I expect it to come down to that level, this area, and we will start to see some kind of pullback up to this level. Okay, we talking about 400 bips. I can say it will get to the 400 bips. It can come down here, break the low a little bit between these two area, and we should see some kind of test this area here, regardless of Brexit or anything. Whoever sold the market from this point here, okay, I think that will start to getting out their position and will start to getting long to come here. And if so, we can see another green candle maybe this week, hopefully for the sake of other people I know of, to come and touch here and retrace back down during the week. Obviously, we're going to break it down to daily, but this is the weekly view. That's the weekly candle. There are 5 days inside, and each day have more hours and minutes and seconds and so on and so forth. So inside this candle, you need to see the next candle this week. You need to see what the price action look like. Just like this one, big green one up, followed by red two. I expect this one to do one green up and another green. So we're talking about 2 weeks to 3 weeks coming up to test this low of the flash crash of yen. I think that's not the yen. I think that's the yen, yeah. December, yeah, that's the yen flash crash. And here that's the pound flash crash. So go on pound flash crash here, yen flash crash here. That's how Forex works. So don't put all your money in one position and assuming that is gonna go your direction. Always think about it. It's gonna go the other way. If any evidence showing that it's gonna go the other way, I immediately get out even before hitting my stop loss. How do I know this? From a small time frame and 15 minute, 1 hour, and 4 hour. That's your meter. Okay, to look to the lower time frame to know where's the big picture going. Okay, so from here, let me just view my drawing. As I said, I don't trade it very much. I only see where we're going, and that's my Fibonacci layout. All these colors and stuff is meaning something. I will discuss it in the next video. I expect it to come down to this level here, 119. If spike down here and retrieve back to this previous week close and go up, break it, and continue up, I'll be very happy to long it up to this level, 370 pips. Okay. However, it can spike up a little bit more up to the purple, not the purple, sorry, the pink color, maybe 500 pips, and retrieve back down for wave two if we have a reversal. Okay. Look, this level is very, very, very important, very big level. Okay. Whoever brought from here, take his uh, take his profit up there and start shorting. Now he's taking his profit here. Then we're gonna see another pull back up from here till October. We know that Brexit. Okay, let me just talk about Brexit very quick. Look, guys, if we are leaving, we need to have a deal in place. Okay, what does that mean? Deal in place. We have to have a kind of condition, rules to follow. We can't just leave and build a wall between ourselves and Europe. It's not gonna happen. We have to have a deal, trade deals, percentage, tariffs, all stuff. We need to have a good deal. That's what they call a good deal. Okay, bad deal is gonna be like we have a high tariffs, less tariffs on UK and export and import and all stuff. That's what they're talking about, bad deal. And at the end of the day, we're gonna have to have a deal anyway. Okay, we can't just leave and ignore no deals, and we're gonna kind of like it's not like you know, even if it's two people get divorced, they need to have a deal. Okay, here in UK, the divorce is very high percentage. I'm just gonna give you an example. So if we leave, we need to have a deal. If we two people leave each other, they need to have a deal how to deal financially, how to deal housing, and all stuff need to be sorted out. You need to be written down on a deal or contract or whatever. When you get married, you have a contract. When you get divorced, you have a contract. When you you buy a car, you have a contract. You have a dealer. You go to your dealer. Okay, so we're gonna have a deal at the end of the day. But that's already priced in the market. So if we count the waves, so it's one, two, three, then wave four is consolidation. Okay, so I can say one, two, three, four, five. Another wave up. So we can one, two, three, four, five. Five is big here. I expected to see some kind of pullback up to this area. Even if we break below this one, it's not gonna go lower. Trust me. It's gonna be very, very important level here. If they break that low, yeah, is gonna be filled with long investors. They're gonna buy from here. Buy is gonna be very cheap. Okay, I don't care about what Bloomberg saying or anyone saying. They normally say something and the opposite happen. Okay, so if the rumor is gonna go down to 1 to 1. Yeah, that's the rumor. What the fact is, Bank of England will never allow this. Okay, there's a lot of money on the line. They can't equally pound to dollars. It's big loss. So they need to feed their currency to the higher level as much as they can. So I expect them to see spike down here at this level, then pull back to this area. Yeah. Then we should see 50 to 61% retracement. Then we should see another pull back up to this level around October, before October. Then that level, if we see good news of Brexit, we should get back up to 133. Then break that 61% and go back up to the 88 area up to here. Obviously, that's going to be not in 1 day or 1 week or 1 month. It's going to be like during the rest of the year. So I expect it to continue back up here because it's already oversold, overdone. Yeah, there is no seller. That's why it's moving very, very slowly. There's no one want to sell the bond here. I can't sell the bond here at all. Very critical area. The the, the Brexit low, the previous higher low. Then we are just gonna touch the higher low here. Okay, we're gonna touch it here. That's gonna be have effect on the market, of course. It could be the same as this one, as because there's no wick. Normally the rejection is gonna be a wick, but if it's no wick, then maybe we can see pull back up to this area, small retracement, and continue back sharply if we have good news. Because if we break that low and we continue up and retrace, that's long. Okay, because I'm not the only one watching. The whole world is watching this area here and this area here. If it's gonna break down lower and they start long from there, investing, they would start putting money in the market and waiting for it to return back up there. So where and when the best time to look at this high probability trade? At London open. Okay, if you are somewhere in the world, you need to find out what exactly the time London open and what time is closing. Europe open before London 1 hour, 60 minute. Okay, so I normally look at Euro open, how the Europe reacting, then London follow up. If that's paid, meaning that's money flowing to the banks of England, then the pound is gonna get paid and push up. Okay, if no much orders, nothing really happening at this opening, the pound consolidate and it can go low a little bit or higher or sideways. There is no really big deal. But if we have, because I'm sure there's no seller here, absolutely no seller. Unless it's break down really sharply, then we see small retracement and start to move back down, then we can say, okay, that's the seller now in the market. They see their pattern and they jump in the market. That's when you get in. Okay. But if we continue, we can see in 1 hour and 4 hours some kind of green candles, and we see like some buyers. I will be stopping right here. That's going to be my between these two, like here, like 124, 125 up to this level, Fibonacci. And you know the market moving percentage, and that's like what percentage it is, like 11%. Sorry, 0.11. So I always follow Fibonacci percentage. If the market come and touch the 50%, as you can see twice, one after that low, come back, touch it here, then break it and go lower. They're gonna come back up here. That's the best level to get out if you're gonna be long. Possibly you're gonna touch that first and continue back up there. So I'm talking about just below it a little bit. It's gonna break that low and come back up here, about 550 bips, wherever it takes. But the my stop loss will be after the market move back up. Is gonna be below the low of the low of that low. Okay, that's the weekly view. Let's drill down to daily. Okay, you can see here what I'm doing. Sorry. So if you can see here, you can come back up to this area. If you extend a little bit lower, more and more, you can see a push back up there, like this, like that. Consolidate, few wave, then spike back up, break it, continue back down, then break it and go higher up to this level. Okay. Then with 1, 2, 3, 4, 5 ABC, then we should see head and shoulder pattern. When we short here, then we'll see with 1, with 2, then we should see with 3, so on and so forth. It will be like, just get this. That's how the market moves. Generally, that's how the market moves. It doesn't move in one line like that all day up, all the way down. That's when we draw this like that. We were just talking general moves. Inside that, each one we do like this. Okay, there is a small waves inside. So wave can be wave 5, then small wave, and so on and so forth. Okay, so I expect it to come back up here, do another left shoulder, right shoulder, then go back up, break the neckline, go back up and count another bull A, B, C, D, then A, B, C, D big, and break that trend line, then do like that, do like that. We'll consolidate here until we have some good news of Brexit. So that's the way I see it. So how I'm gonna get to this market? Okay, let's just get to the entry. Just go back down to 4 hours. Even you can see in 4 hours here, try to push, Salah push it back down, break that low, and come back up again, retest it. Then 1, 2, the third one, cup and they call it cup and handle, and break this area here, if you can see, just from the previous low, touch, 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 break it, come back up. Then if we do another one here, break out. There you go, break out. at London close, 126 pips, say 100 you target, then market come back up here. If we extend this um, up to these levels, we just do like that, market very much can come back, do this and try to break this, come to this level, come to this level, come to this level, and test that one, then challenges 2, 3, 4, and we level up here. That level is 126, and that on the long time frame and the big time frame, it should be um, a green candle. If you are if it's one daily, you're going to see another just 1 day green here. Okay, remove my drawing here. Just there you go. Just remove it a little bit. You should see another green candle here. Try to test this 2 lows 3 area, and if you spike up here, that's mean taking out the stop loss. The people putting stop loss here, they short from here, for example, and they put it just in middle of this area. If we break it, then we come back down here a little bit, then continue back up. That's nothing to do with Brexit. That's money flow. People buying and selling the currencies. Okay. I know the market moves on the news, the market move on orders. So just to be clear about the pound itself, when anyone buying Asia or US session pound currencies, they be pending orders in the bank. When the Bank of England start to open in the morning, they receive this pending order and they start to process it. Then the market start to move. That's when the liquidity is big, and that's why my starting of the day it's when London open. Okay, if we break above or below the London hour open, then we should see move down or up like on the rest of the day. Just before New York, New York will come in, continue the move, then we have a confirmation. The move is gonna go continue the direction. That in Asia, it could be pullback, then down in London, the push higher. Down in Asia, pull back, London, push higher or low, depends on the case. That's aligned with the big picture itself. So you look on the daily, weekly, monthly, so where we're standing. Very important area. We're gonna play between these two areas here. The flash crash and the pullback of this area. I assume or I think, just I say I think is gonna play here, maybe Monday. If it's nothing, then we continue should see come and retest this trend line, possibly break it and level up with these two areas, this area. I don't think it's gonna go down more than that, but if it does, I will not gonna be shorted from here. I need to see a good pullback, 50% of this move or this move. So 50% of this move to the low area, then I will should see some sort of pullback, 23% or 38%, but it's not here. Obviously, it's gonna be down here. And that's how I'm gonna play pound USD. And pound USD when it move against the dollar, that's mean the dollar is weak. That's mean Aussie is strong. Then pound Aussie could be level sideways unless we have a good news. Pound value increased, then you will be pushing across all pairs, no exception, because the pound in value is increased, and that's why the pound move across all pairs because of some news or some any comment from Brexit or stuff like that. They increase the value, okay? It's not someone buying or selling. No, they only increase the value how much worth that pound worth alone without the other pair trading against it. That's something you need to learn down the line. If you see the whole pound pairs moving at the same time, it doesn't mean someone buying it all together at the same time. No, the value of the pound is increased or decreased. Okay. Okay, guys, I hope that was helpful, and please subscribe, like, and leave a comment and share my videos. And hopefully, I'll be doing more and more in the coming future. Thank you, guys, and good luck for next week. Thanks. Bye.